What if I told you the biggest problem you're going to face in trading has absolutely nothing to do with finding the perfect stock? Welcome to This Explainer. Today, we're unpacking the hard, unfiltered truths of the financial markets. We're going to look at the exact reason most beginners lose their money. Every single day, thousands of people get pulled in by the allure of quick cash, completely blind to the massive trap that's waiting for them. So, let's break down exactly what that trap is, and more importantly, how you can avoid it.
Let's just dive right in and challenge a really common assumption. Think about it for a second. What do you think is the biggest hurdle when you first start trading? Is it finding that perfect stock? Scouring the internet for the exact right news article? Most beginners spend hours, honestly, sometimes days, looking for that one magical company that's guaranteed to shoot to the moon, thinking the secret is purely analytical.
But the surprising reality? It has nothing to do with finding the perfect stock. It's actually all about controlling yourself. Seriously, your biggest enemy in the markets isn't big banks, and it's not high-frequency trading algorithms. It's literally the person staring back at you in the mirror.
And here is exactly how this trap begins for thousands of new traders. First, you see a stock going up, right? Then you scroll and see someone post a massive profit screenshot online. And finally, that thought hits you. Hey, I can do that too. You get totally drawn in by these rising prices and this illusion of easy money, and you're completely unaware of the psychological warfare you are about to step into.
Because very quickly, this turns into a disastrous emotional roller coaster. Step 1, the inevitable happens. The market moves against you. Suddenly, you're looking at a red screen. Panic sets in, fear takes over, and you sell immediately, just to stop the pain. But then, the price recovers. So you buy back in, out of pure FOMO. Then, the market falls again. Slowly but surely, just by acting out of fear and greed, your account gets smaller and smaller. So, here is a crucial point you absolutely have to accept, and it's one of the most painful but necessary lessons in all of trading. The market simply doesn't care about your feelings. It doesn't care if you're having a bad day. It doesn't care if you really need this money to pay off a loan, and it definitely doesn't care if you're feeling anxious. The market is entirely indifferent. The sooner you detach your personal emotions from the price action on that screen, the closer you get to actually being successful.
See, professional traders understand something that beginners consistently ignore. Trading isn't about being right every single time. It is absolutely vital to accept that even the most experienced veterans out there take losses. A beginner thinks a losing trade means they failed. But a professional? They know it's just a standard business expense. It's literally just part of the job.
And that introduces our core defense mechanism, risk management. The real goal here isn't to never be wrong. That's impossible. The goal is to control exactly how much you lose when you are inevitably wrong. It's the practice of limiting your capital loss, and honestly, it is the absolute foundation of a trader's longevity. Without risk management, you're not trading, you're just gambling.
Let's actually compare a reckless approach with a highly calculated one to see how this works. Imagine two traders. Trader A risks almost everything on one single trade, going all in just because they are 100% convinced they're right. Now, Trader B practices proper risk management, risking only a tiny portion of their account because they accept the fact that they might be wrong.
Now, if both of these traders make the wrong prediction, which happens to everyone, the results are drastically different. Trader A suffers a massive loss, they're emotionally devastated, and they are completely forced out of the game. But Trader B? They take a small, calculated hit, they still have enough capital to keep learning and actually capitalize on the very next opportunity.
Which brings us to a really profound realization. Survival in the market hinges entirely on playing defense. Successful trading is so much less about chasing those huge, flashy profits and much more about protecting the capital you already have. Look, if you protect your capital, the profits will eventually come. But if you focus entirely on the profits and completely ignore the risks, you won't have any money left to trade with.
Okay, another massive pitfall is overtrading. This is usually driven by a dangerous beginner's illusion. Hey, if I trade more, I'll make more money. And it makes logical sense in a standard 9-to-5 job, right? You work more hours, you get paid more. But trading doesn't work like that. It only rewards high-quality decisions. More trades usually just mean more mistakes and more commissions paid straight to your broker.
Actually, sometimes the absolute smartest thing you can do is really simple. Number 1, do nothing. Just wait for a specific setup. Study the market conditions, understand the exact risk, and only then make a decision. In this game, patience isn't just a virtue, it's a highly lucrative skill.
Now, this disciplined reality sharply contrasts with the dangerous habit of following social media. We have all seen this exact post, right? I made $10,000 today. Usually it's accompanied by a picture of a rented sports car or some exotic vacation. These boastful posts create a completely false, hyper-glamorized picture of what trading actually looks like, and it feeds directly into that beginner's trap we talked about earlier.
What is absolutely crucial to understand about those viral posts is everything they're hiding from you. You don't see their losing trades, you don't see the grueling years of experience it took to get there, and you have no idea how much risk they actually took. Did they risk 100 grand just to make that 10,000? Social media sells the flashy outcome, but it completely obscures the messy reality.
The truth, real trading is usually much less exciting than the internet portrays. It is not a non-stop adrenaline rush. It's research, it's patience, it's ironclad discipline and strict risk control. Fundamentally, it's about accepting that uncertainty and losses are just part of the process. It's a highly structured, almost boring routine of managing probabilities.
And because of that inherent uncertainty, here is an absolute non-negotiable rule. You must protect your livelihood. Never trade money you cannot afford to lose. If the money you're putting into the market is meant for rent, food, emergency expenses, or your essential bills, just stop. If you're trading with money you need to survive, your emotions will be amplified 100 times over. You'll panic at the absolute slightest dip, completely short-circuiting any logical strategy you might have had.
You also must never confuse trading with guaranteed income. Let me be clear. There are no guaranteed strategies. There are no secret indicators that only the elite Wall Street guys know about, and there are absolutely no magic formulas. No trader wins every single time. So stop looking for a cheat code and start learning how to actually manage the unknown.
So if you're truly ready to learn, you need to change your mindset. Don't start by asking how fast you can make $1,000. Instead, challenge yourself with a much better question. How can I understand the market and manage risk before I ever put real money on the line? Because that is exactly what a professional asks.
And here is your structured path forward to do just that. First, start with education, just like you're doing right now. Second, practice with a simulator. Use fake money that's tied to real market data. Third, keep meticulous records of exactly why you entered and exited every single trade. And finally, rigorously study your own mistakes before you ever spend a single dime of real capital.
Ultimately, having a plan and staying disciplined boils down to one singular truth. Never let one trade control your future. Because successful trading isn't about predicting every market move flawlessly. It's about testing a plan, managing your risk, and staying completely disciplined when the market does something unexpected. That's the real side of trading most social media feeds will never show you. So, are you going to let your next impulsive decision dictate your financial future, or are you going to build the discipline to protect it? If you enjoy educational explainers about money, investing, business, and the psychology of success, subscribe for more.